Hello, I'm Mark Starosciak, Managing Partner with Infinium Investment Advisors. You have tuned into our market update for September 2015. Today we're going to talk about winning strategies so far in this year. Many people believe that nothing has worked, but there's couldn't be further from the truth. There are parts of this market that indeed are doing quite well, and we're going to take a look at those. So as a reminder, anything we talk about today is purely for informational purposes, not intended to be a recommendation to buy or sell securities, follow any investment strategy. We do not offer tax and legal advice, and always consult your own financial advisor before making any investment decisions. All right, back at the beginning of the year in January, we said, look, this is going to be the year of mush. This continual uptrend in the market is not going to last. There are cross currents at work, and we're probably going to be fairly neutral. Lo and behold, I believe this year we're down somewhere in the 2% range. Been up as much as 4 or 5% and down 8, 9, 10, depending on what market you're looking at. But here we are today, 9 months in, and the markets are essentially flat. So at that time, we said the trends for the markets were transitional, and that we were in a very neutral type stance. On a short and intermediate term, we think that absolutely has played out, as well as the extreme volatility. It's absolutely picked up here, especially in the last month or so. Longer term, it's a little harder to call that. Obviously, the short and intermediate need to give us a signal, and then you'll be able to tell from a long-term perspective, is the market in trouble, or is it going to try to make a new high? But we think we're at an inflection point here, and that the markets are indeed ready to make a move, and it looks as though they're very much keying on what the Federal Reserve is going to do. We just don't know, but based on everything that we're looking at, the markets appear as though they're ready to make a move, either to break higher or to fall down. We haven't seen a correction in the market up until recently for the last 4 years, so that corrections are inevitable. It's just a matter of when, not if. And one of the things that we're looking at from a bearish perspective, at least, is what we call a bear pennant. And this is simply a very technical way to look at the markets and how they're trading. You can't always rely on technicals, but we do think that they're very telling in terms of how healthy is the market. In this instance, in a bear pennant, you see a sort of severe downturn followed by some consolidation, and it starts to look like a triangle pattern. So you have a bearish pennant, down, sort of consolidates, and then the typical break to that is here lower. Well, we ran an example here of the S&P 500 and what it's done in the last 3 months, and you can see it's a very classic bear pennant. Okay, and the question is are we going to break lower? Now, in the last 2 days, today as well, we've seemingly are breaking higher. So it looks like the market is going to like whatever news we're about to get. Now that, of course, can always change, but the bear pennant looks like it might be off the table, which is very good if you're long the market. So the question that we posed back at the beginning of the year was, are there any investments that can go up in a flat or down market? And so we posed that again, and at the time, we gave a few examples of these parts of the market that are not widely followed, that tend to go up or can go up if the markets are rocky or flat. So two that we'd like to highlight here are short commodities and volatility. We can't name the specific fund. The regulators don't like that. But these are two funds that we are currently using in our models for many clients. You can see the short commodities is up double digits in a market that's off 4. And the volatility play, that's a little more complex of a strategy. But nonetheless, it has done really quite well, being up almost 8%. So our thoughts to you on this eve of a Federal Reserve decision that may very well push the markets one way or another is you want to have some real diversity in your portfolio. So we're going to ask that same question again, is, what do you have in your portfolio? Because something is always working. So examine it, assess how much of what you have is built on a rising stock market. Many investors, we run analysis on their portfolios, we discover that the vast majority of it, if not all of it, is set up for rising stock market. So you're just not going to make money if the markets or when the markets do see a correction. So we encourage you to consider investments that can go up in a variety of markets, bear, bull, and neutral. With that, I'm Mark Starosciak, and we will see you next time.